What's going on, Investomaniacs? Your boy, a Night Rider here. Hey, it's summertime, and you know what that means. Time for a little fun in the sun. We're going to examine some vacation stocks, some gambling stocks. Hey, all of these are vacation and gambling. We're going to be breaking down Wynn, Carnival, and Royal Caribbean. Wynn is one of the few companies privy to both the Las Vegas and Macau gaming markets. Its most recent Macau numbers looked pretty good. This is the Macau resort you're looking at here. Wynn caters to the high-end consumer. And by the way, just a few weeks ago, they opened their first U.S. property outside of Las Vegas. It's unknown if the non-Vegas location or future locations will be able to attract enough high-end consumers to support itself, again, outside of Vegas. But nonetheless, Wynn is bringing its Vegas glitz and glamour to New England with its Encore Boston Harbor Hotel and Casino, located just a little outside of the city, providing upscale gambling in a market which has previously only had mid-tier options. I mean, just look at this. Doesn't exactly blend in with the rest of the environment, does it? No. It's a gamble, no pun intended, but if it works out, they get all the market share. With the positive news from Macau and their latest property standing as a shining beacon of stateside expansion, Wynn is a more interesting kind of option than it has been in a little while. However, it has extremely high exposure to China. 73% of its revenues are coming from China. And you know what I've been saying. Stay away from American companies with significant Chinese exposure, whether that be direct or indirect. Once the trade war is resolved, then we can consider Wynn. Up next, the cruise ship company Carnival took a second quarter hit due to them missing their estimated revenue mark. Despite the miss, Carnival increased its dividend payout pretty massive now. One of the challenges facing the cruise line right now is its $20 million penalty served in June by the U.S. District Court of Miami, along with the negative press associated with that. The ruling came down after years of environmental issues and activist groups saying that the cruise lines were regularly dumping trash and petroleum waste into open waters. CEO Arnold Donald has pledged Carnival is committed to cleaning up their act. Get it? Because they were dumping a bunch of stuff in the ocean. Clean up. On the flip side, Carnival will soon be the users of the world's first floating dry dock, with their popular Carnival Vista to be the first ship repaired employing the new mobile facility. Now, they don't own this, they're just using it, but if it ends up being successful, then that will lower costs for both Carnival as well as, other cruise lines using the technology. The new dry dock will be putting the 4-year-old ship on it for 2 weeks while its propulsion systems are updated. This mobile dry dock should speed up repair times for cruise lines, as instead of the cruise ships having to travel to the dry dock can meet the cruise ship where it already is. Despite the revenue miss of this most recent quarter, I do not want you to mistake the raindrops for the ocean. Carnival has been growing its earnings per share at 25% annually over the past 3 years, and the top line at 6% annually. The darn thing trades at 11 times earnings and sports a 4.36% yield. Call me a buyer. Up next is Carnival's South Florida neighbor, Royal Caribbean, home of the largest cruise line ships in the world, the Oasis class ships. That's what you're looking at here, by the way. The cruise line just ordered the manufacturing of their third Icon class ship, which will be powered by fuel cells, which use the less environmentally taxing liquefied natural gas. The ships are part of a concerted effort by the company to reduce its carbon footprint. The first ship will be delivered into service in 2022, with the second and third ships coming on 2024 and 2025 respectively. Additionally, Royal Caribbean recently announced that its Voyager of the Seas, which you're checking out right here, is going to be offering a souped-up family and luxury amenities beginning this fall, including giant water slides, one-of-a-kind spa experiences, and glow-in-the-dark laser tag. These announcements definitely have things looking up for the cruise line, but should you get on board with Royal Caribbean? Okay, that pun was intentional. I like Royal Caribbean, even if probably a little bit more than I like Carnival right now. It is more expensive, trading at 12.5 times earnings, and does have a smaller yield at 2.54%, although that's still a pretty decent sized yield, and it's still very expensive. Part of the reason why I like Royal Caribbean, first of all, it doesn't really have negative news surrounding it right now, at least relative to Carnival, which, kind of the polluting in the oceans and affluent people and people who, the younger demographic, people who are more environmentally friendly, they don't like hearing stuff like that. And so they would probably opt for something more like a Royal Caribbean, which would be its closest competitor. And I really like its Oasis class ships. I think you have a winner with those Oasis class ships. It really is distinguished from everything else on the market. There's the Oasis class ships, and then there's everything else. It's a huge difference between the Oasis class ships and the next largest ships on the world. And they also attract, Royal Caribbean does, a higher end consumer with more discretionary money relative to Carnival. And it's also growing quicker. Its 3-year annual earnings per share growth is at a beautiful 42% compared to Carnival's 25%. Now, I do want to add on a personal note. While I personally haven't been on Carnival or Royal Caribbean's flagship ships, I have been on some of their lower end ships, and in my opinion, Carnival is an overall superior experience, at least at that level. The employees were much more pleasant on the Carnival ship relative to Royal Caribbean. Similarly, I felt that you got more bang for your buck on Carnival. For example, on Carnival, you can order food and have it delivered to your room for completely free. Royal Caribbean charges a fee for that. Royal Caribbean also charges higher gratuities, despite, in my opinion, Carnival having better service. Carnival is also transparent with its pricing in regard to gratuities. In contrast, Royal Caribbean tries to hide gratuity pricing. On the pro-Royal Caribbean side, their private island Coco Cay is a complete winner, and I think they are going to make a whole grip of money with the upgrades that they're making. When I was there, it was pre-upgrades, and now they've put a whole bunch of upgrades on there, and they're calling it the perfect day. The upside is obvious, whereas before they would have to do a revenue share with third-party companies for the excursions. Now they own 100% of the profits, and they have more control over the experience. This is an example of how we need to take personal preference into consideration, but also keep our investor hat on. Royal Caribbean appeals to a somewhat more affluent demographic relative to Carnival. So although I find Carnival to be a better value, and I prefer it as a consumer, given the amount of money I want to spend at this point in time, as an investor, I like Royal Caribbean because they do appeal to that little bit higher demographic, which leads to increased ticket prices and increased spending throughout the cruise. I love the Oasis class ships, and also Royal Caribbean owning that entire Coco Cay perfect day experience. However, my leaning towards Royal Caribbean isn't massive. If the valuation differences were to expand, I would be back to preferring Carnival. Hey guys, that's it for this video. Here's my portfolio just for full disclosure. I really appreciate the likes, comments, and subs. Thank you so much. Let me know if there's any stocks you want me to cover. Have a great day.